When I think about the housing market next year, 2023, there's so much coming our way. And as we talk about the forecast for next year, this is really about what the national experts are saying and what's most important as we go into the new year. So I'm pulling all of that together for you to help you make sense of all of it and also to take a look at what is in store for the Atlanta metro area. Understanding what is going on nationally is important, but it's also valuable to be aware of our local market here in Georgia and look at where we may differ from the national trends. I think the best place to start is really to talk about what happened in 2022. The 2022 housing market was really defined by inflation and rapidly rising mortgage rates. We know that the Federal Reserve has been trying really hard to bring inflation down, slow the economy, and get all that under control. And that has really defined what's happened this year. We're not out of the woods yet, and as we look ahead to next year, it's going to be defined by, can the Fed bring inflation down and keep it down? I'm going to talk a little bit about that today and if we will see stability in the market. There's been so much volatility, especially around rising interest rates, mortgage rates. Will we see that stabilize next year? So what I'm going to share with you today is a look at projections from the experts on mortgage rates, home sales, and home prices, and that'll get you headed into the new year. I want to start with this quote from Jerome Powell, the Fed chair of the Federal Reserve. This is actually a quote from earlier this year. It's from June of 2022. And it says, I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. This really sums up the essence of what the Federal Reserve was out to do this year to slow the economy. We know that housing is a big part of the economy that needs to come back into balance, and this is all driven by inflation. So we're going to be talking a lot about that today. You're going to hear me say it's all driven by inflation quite a bit. You know, there's a lot more work to be done, but right now the economy is really in a place where we're trying to get rates down. We've seen that impact demand, impact home sales, and that's had a downstream impact on home prices. The first topic we want to tackle in the forecast is mortgage rates. We can start with where we have been so far this year. As I mentioned a moment ago, 2022 is really defined by rapidly rising mortgage rates. You can see this is a look at the Freddie Mac 30-year fixed rate going all the way back to January. What you can see is at the beginning of the year, mortgage rates were at a historical low, and then they have risen pretty significantly through the year. And you know, we've seen a little bit of a reprieve over the last few months, which is maybe a nod to inflation potentially starting to take a turn, potentially starting to come down. Like I said a moment ago, I don't think we're out of the woods yet, and we need to keep our eye on that, but we've seen a little bit of relief in mortgage rates recently. The story this year is not about where that number is today. It's really about how mortgage rates rose so quickly. They more than doubled this year, and we have never seen that happen in a calendar year. So what does that do to the housing market? Well, it slows buyer demand because everybody's looking at this feeling of fear and uncertainty about where rates are going. Are mortgage rates going to keep rising? That's what slowed the pace of home sales this year. It's not necessarily about the fact that mortgage rates have ticked up over 7% last month, but really more about that rapid rise throughout the year. What the housing market is looking for is stability. And this year, we've seen a lot of volatility in the market. The market is really looking for that stability to come into play next year, and that all depends on inflation. So let's talk a little bit about what the experts are saying. Here's what experts are projecting for mortgage rates next year. This is a look at what Freddie Mac, Fannie Mae, MBA, and NAR are projecting for 2023. And it's the latest forecast we have that came out in November. If you average them all together, they're saying somewhere between 6 and 6.5% next year. Maybe a little higher at the beginning of the year, maybe coming down a little bit. Again, it's really not so much about the number, but what we're looking for is stability in the market. Because stability brings certainty, and certainty brings buyers back. It's the volatility that has really been a challenge in the housing market. As I look at this chart, mortgage rates are really hard to project. Even the experts that are projecting them right now are having a challenging time pinpointing exactly where they'll go. So what I don't want you to focus on is the exact number, because whether it's somewhere between 5.5% or 6.5%, wherever they may land, stability is really what we're looking for. We want mortgage rates to stabilize, and that will bring a little more predictability into the housing market. Right now, we know as inflation is high, mortgage rates are going to be high. The Fed is continuing to try and bring that down. We've seen little hints of maybe that's starting to happen, and we're going to continue to watch that to see where mortgage rates will go as well. This quote from Greg McBride at Bankrate says it well. It says, "Mortgage rates could pull back meaningfully next year if inflation pressures ease." Again, it's all about inflation, and that's certainly what we're looking for. We're watching inflation, we're watching the 10-year Treasury yield, we're watching all of those factors to see where mortgage rates go now. As we continue to talk about that, as we watch the Federal Reserve make announcements, we know they don't call mortgage rates, but they definitely have an influence on them. And if they continue to make aggressive hikes as they have throughout the year, we may see mortgage rates go back up before they come back down. We're watching inflation, we're watching that reaction to see what happens in the market and truly looking for that stability. And if inflation pressure eases and mortgage rates pull back, that is certainly what we hope will happen. That is definitely what we are looking for. So as we talk about mortgage rates, we know they've had a major impact on home sales this year. And also, as we look ahead to home sale forecasts for the coming year. What I want to do next is share with you a little bit of what experts are projecting where home sales will land this year, and then look ahead to next year, and that's how it's all coming together. This is a graph of total home sales, and it's going actually all the way back to 1999. It's a combination of new home sales and existing home sales, and when we look at the forecast for 2022, where we're projected to end this year in just over a few weeks, it's looking like experts are saying about 5.8 million home sales this year. Now let's put this into context. If you're coming off of last year, where we had a record number of home sales, almost 6.9 million homes, then 5.8 feels like a big slowdown. I'm sure you felt that all year long. Feels like last year we were just completely cruising. It was a buyer's frenzy, lots of transactions. It was a very different year from where we've been recently. Last year felt like you were driving down the highway at 85 or 90 miles an hour. You were cruising, you came around the corner, saw the flashing lights, pumped on the brakes, and started to slow down. And although you were going the speed limit at that point, it felt like you were just crawling. And that's probably what you've experienced in 2022. So 5.8 million feels like a big drop-off. What I want you to take a look at is the projection for next year. Experts are saying about 5.1 million home sales. So next year is going to feel a little bit slower. We know inventory is still significantly low. There are not enough homes on the market. And as we look at this forecast, I want to park here for a second because let's put this into perspective. As we look at 5.1 million home sales projected for next year, we know that they're making that forecast right now in the depths of winter, and it's a little chilly out there. So inflation is high, mortgage rates are high, inventory is low, New construction is slowing. Buyer demand isn't as high as it was last year or at the beginning of this year. So all of those factors are kind of layered into this projection. But what we could see is this number going a little bit higher because experts tend to reproject and reforecast as the year unfolds. And as we look for that nod to inflation potentially coming under control and mortgage rates potentially coming into a more stabilized environment, we may see this number tick up. And it's definitely something to keep our eyes on over the next few months. Next year, I'm going to keep you posted on home sales as we go, but right now, the projection is roughly around 5.1 million home sales. Let's break that down. 5.1 million, and you can see where it's coming from. It's an average of 4 expert projections from Fannie, Freddie, MBA, and NAR, ranging from 4.5 to 5.5 million, brings us down to an average of about 5.1 million. Let's also talk about what could potentially kickstart home sales again next year. Here's a quote from Lawrence Yun, Chief Economist at National Association of Realtors. It says, "The upcoming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November." So as we're looking for that stability in the market, we've seen mortgage rates rise, we've seen a little bit of relief over the last couple of weeks, and we certainly hope that they peaked. We're going to continue to watch inflation and continue to see where that goes. But that could potentially bring more buyers back to the market as this continues to play out. So as we think about more buyers coming back to the market, we also want to talk about home prices. This is a big question on everyone's mind right now. Here's the latest look at what 7 of the key experts are forecasting for next year's home prices. This is year-over-year home price appreciation, and what we're seeing is some are saying a little up and some are saying a little down. Again, as we average those all together, we're looking at a roughly neutral or flat home price appreciation for next year. The truth is, no one is calling for massive declines in home prices. We're still seeing low inventory and more buyers and sellers on the market, so that's going to continue to keep upward pressure on prices. It's going to continue to keep prices in check. This is looking at prices nationally, but we know that local metro markets can vary significantly. So what about Atlanta? I have some exciting news from Lawrence Yun, NAR's chief economist. He unveiled in NAR's annual year-end forecast that they predict Atlanta will be the top real estate market to watch in 2023 because they expect it to outperform other metro areas. They selected Atlanta as the #1 real estate market to watch in 2023 based on how this area compared to the national average on the following economic indicators: better housing affordability, greater numbers of renters who can afford to buy a median-priced home, stronger job growth, faster growth of information industry jobs, higher shares of the information industry in the respective local GDPs, migration gains, shares of workers telecommuting, faster population growth, faster growth of active housing inventory, and smaller housing shortages. For this reason, Atlanta's home price appreciation may lean towards the positive side of neutral in 2023. Looking ahead to 2023, it's helpful to hear this quote from Mark Fleming, chief economist at First American. It says, "The housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply." We still have demographic demand out there, especially among millennials, the largest home buying cohort right now. There are a lot of people out there who are waiting for the economic dust to settle, but at the same time, the demand and the interest are still there. So once we start to see some of that stability, once we start to see some of that consistency, the demand is there. Supply is still low, and that should continue to keep home prices in check. As we look ahead, the last quote from Doug Duncan, chief economist at Fannie Mae, says it well. From our perspective, the good news is that demographics remain favorable for housing, so the sector appears well positioned to help lead the economy out of what we expect to be a brief recession. At the beginning of this video, I talked about how it's all about inflation, and the more we start to see the Fed aggressively work to bring inflation down, we start to hear more chatter about a potential recession. There are a lot of people out there saying that's more and more likely right now. So if we come into a recession, the big question that a lot of people are asking is, what happens to the housing market? Here's what we know from history. Over the past 6 recessions in this country, mortgage rates have actually come down. Now that doesn't define exactly where we'll go every time, but history teaches us a lot. The housing market, with its demographic demand, with inflation, and with the nod to inflation hopefully getting under control over the next year, mortgage rates ideally stabilizing, could help lead the economy out of a brief recession. As we think about what's ahead for next year in 2023, the story is really around, are we going to be able to see inflation come down and stay under control? And will we find stability in the housing market? That is going to be the story of 2023. And I will continue to keep you updated on all of those factors as the year unfolds in my monthly market snapshots. Click subscribe so you don't miss each month's report on the North Metro Atlanta housing market. So what does this outlook mean for you as a buyer or seller? Well, buyers, as a response to increased interest rates, you may have to decrease your budget, but due to increased inventory and average days on market, buyers are beginning to have the ability to negotiate prices more than in the recent past. It's important to have a buyer's agent on your side who can advocate for you through these negotiations. And sellers, gone are the days where you can list your property with just any realtor or even by yourself, and you have a handful of over-list price offers at the end of the first weekend on the market. Increased inventory on the market means you have to price the property accurately, as well as efficiently market to get the most exposure. We have already seen an increase in the use of open houses as a marketing tactic throughout this year. Georgia MLS had a very interesting report. In January of this year, there were 738 open houses in Georgia, whereas this past November, there were over 11,000. It's important to hire an experienced listing agent with market expertise and solid marketing strategies to maximize your bottom line. I hope everyone has a fantastic 2023. Thank you for watching, and be sure to hit subscribe to stay tuned to the North Metro Atlanta housing market. I'm Cindy Bunch with the Bunch team at Keller Williams, and we want to set you up for home buying and selling success.